I mean, the way the stock has come off, Cipla more recently, before that Sun.
Hello and welcome. You're watching Business Today TV. I'm Sakshi, Batra, and this is Market Today, a show where we'll help you understand all the closing action on the D Street. Well, throughout the trading session today, we've seen deeper cuts on the markets, and it's a broad-based sell-off that we've been witnessing, be it the benchmarks, the broader markets, or the various sectors of the Nifty. It is a down kind of a day. In fact, the fourth consecutive session when we are seeing the Nifty and the Sensex really drifting lower. Right now, as we speak, 17,566, the current level of the Nifty. It's down by 260 points, 1.5 points gone for that one. It's breached that 17,600 support level as well. The Sensex has slipped below the 60,000 mark today. It's a down day, 870 points gone there, 1.4% of a decline. 59,800 the current level for the Sensex. Let's also look at how the broader markets are doing at this point in time. The mid and the small cap 100 indices, both of them have been also trading lower. 1% lower for both these indices at this point in time. But look at the India VIX. That's the level that I've been asking throughout the trading session for all the viewers to keep an eye out on. 11%, almost an upside, 15.5. And as we approach the expiry session tomorrow, the volatility is only rising. Right now, the market breadth clearly in favor of the declines. 47 stocks in the red of the 50 stocks on the Nifty index. Only 3 stocks holding up. Which are these 3 stocks? It's ITC, 0.5% up, Divis Laboratories, 0.25% up, Bajaj Auto slightly up in trade by 2.2% as well. The other laggards at this point, which are the stocks that are creating a whole lot of pressure on the markets? It's the Adani group of stocks, all 10 of them down in the red today. Looking at Adani Enterprises first, it's down by 10% today, 14.12, although off the lowest point, but still double-digit losses for this one. Adani Ports down by 5.5%. Grasim seeing a cut of almost 4%. JSW Steel, Bajaj Finance, all of them cracking by almost 2.5-3% odd as well. In terms of the sectors of the Nifty, the biggest decline being seen on the metal pack today, 2.5% loss for this one. PSU banks continue their downward trend, 1.8% lower. Realty space continuously under pressure, 1.6% down. Private banks down by 1.5%. The Nifty Bank overall down by 1.5%. Autos are now down by 1.3%. FMCG slightly lower, just about 0.3% odd as well. And when we talk about the IT stocks, those are down by 1.2% as well. So all across the board, if you see, there is a continuous decline. All the sectors of the Nifty down in the red. Time now to welcome our guest for the day. Gaurav Dua joins in. He's the head of capital market strategy at Sharekhan. Mr. Dua, good afternoon, and thank you so much for taking the time out for this discussion. Well, a sharp fall, 900 point of a cut on the Sensex today. Tell me, how are you looking at the fall that we've seen today? Does it actually show some kind of a red flags of the market looking at a deeper correction going forward?
So what is happening is not only in India, but across the equity market across the globe. What has happened in past few weeks that the economic data from US and also from Europe has been exceedingly good. Now that is actually turning out to be bad news for the equity market, because this means that the central banks across the world are going to increase the interest rates more than expectation now. So the globally, equity markets are adjusting to this now. Uh, However, having said this, we might go and test the lows that we had seen on the day of the budget, but breaking those lows, I still, I think we still have to just wait and watch.
All right, but what could be the major triggers of behind this fall? Is it the Adani Group route that continues? That is the major reason, or do you think this largely has to do with the interest rate hike fears, longer, higher for longer kind of a period that everybody is anticipating? Is that the bigger reason? The FII is now looking at more attractive markets like the Chinese markets right now. Which of these factors do you believe are the major triggers of behind this fall, and which could actually continue to be a major concern going forward from here too?
So, if it was only for Adani, it would have been only Indian markets down. But we see that, equity market across the world are down. US markets were down by 2 to 2.5%. Asian markets are down. European markets are down. So obviously, it is uh, uh, not the Adani factor alone. So
Yeah.
it is this thing more to do with what is happening across the world. That is number one. The whole this thing China opening up, and there's been this thing FIIs which are withdrawing from India and other this emerging markets
Hmm.
to invest in China. I think more or less of that adjustment is done. So if you see, India was trading at a very high premium to this thing China, but in past about a month or so, that has that has been breached already, and now we are close to the averages that we have seen in the past decade.
Okay, understood. But what should investor strategy be at this point in time? Looking at the fall, I mean, almost 2.5 months or so, markets had been stuck in a range, lackluster, sluggish all through. But today's fall and after that, what should be the apt strategy that investors can continue to do to protect their capital on one side, and on the other hand, focus on areas where they can continue to make profits?
So, what we see is that this is a phase where markets will actually do well, staying in the range. This will give investors a lot of time and opportunity to buy the right kind of stock at the right price. And we believe over next 1 to 2 years, you're going to see a substantial upside from here. Number one. Number two, to this thing, protect yourself from these this thing, swings that you see in a range. One has to be very clear about the stocks that you are buying. Please try and avoid small stocks,
Okay.
momentum stocks, speculative stocks. Number third, what we believe is that you should focus on buying on the themes. Uh, the distinct themes that we like is basically banks. We like IT sector. We also like stocks from from the railways. We like stocks from from the defense sector. So I
Okay.
think these spaces are are offering you an opportunity to buy, and this, as an investor, one needs to accumulate over this next few months.
Okay, what about the IT space? That sector has been showing some kind of bouts of late, even though today it is under pressure because it's a broad based sell off that we've been witnessing. But over the last few weeks or so, we have seen considerable amount of bounce back in some of these stocks after huge underperformance in the year 2022. Do you think it is time that investors can look at the IT stocks and start to nibble in some of them, be it the large or the higher mid caps?
So the whole uh, the reason for the IT stocks to go down was that there is an aggressive interest rate hike in US, and that is going to lead to slowdown, probably a very very sharp slowdown. There was all these talks about hard lending and this is soft lending. However, the economic data, which now we see out of US, is shows very very clearly that there is going to be absolutely no lending. US economy is doing well, and you might not see a phase of negative growth in US. So this is going to help IT companies, which in last about year or so, their the prices are down, premium is this thing off the book. So in fact, we have this thing come out with a note about a day back where we have turned from this thing underweight to overweight on IT.
Okay, okay, okay. And where exactly would you be overweight? Would you be overweight on the top three or four large cap names, or are you also bullish on these mid cap names?
So we like a mix of of this large cap and mid caps. So we are basically focusing on those stocks which have got got this higher exposure to US than to Europe.
Okay, okay, understood that as well. But you briefly did mention about the Adani Group stocks, and we've been seeing continuous rout going on. Yesterday, it slipped. The market cap of the whole group slipped below $100 billion, and it has not stopped anywhere. This is despite the management looking at repaying or prepaying some of their loans as well. Also looking at preserving their cash flows at this point in time, not looking at debt-fueled expansion plans. So they are trying to be financially prudent at this point, but nothing is really working in calming the nerves, and especially the new development in the Adani Hindenburg report. Wikipedia's online newspaper, The Signpost, has published a news report stating Adani Group has employed several undeclared paid editors to clean the Wikipedia page, and that has perhaps led to the sharp reaction that we've seen in the markets today as well. After all these 3 weeks of consecutive, carnage that we've seen on the D Street for the Adani Group stocks, how are you looking at this group at all? And, what are you advising investors? You may be getting a lot of calls as well as to what should investors be doing at this point.
So, what we have been asking our clients is to largely stay away from the Adani group,
Okay.
because there is lot of this thing news flow which is not good. Number one, but for those clients who are brave, who still want to go and buy into Adani group stocks, what we are
Yeah.
saying is look at Amuja Cement, or
Okay.
or this thing Adani Port.
Okay.
Now both these have absolutely very good this businesses. Uh, the balance sheets are good, cash
Hmm.
flows are there,
Hmm.
and the stock prices are looking good now.
Okay.
So you can start buying into some of these Adani stocks now,
Mm-hmm.
which look good to us.
Okay, understood. But I wanted to also ask you on a broader perspective as to, a lot of investors are now getting concerned that with this entire volatility, we've also seen the investors losing over 11 lakh crore rupees in these last 21 trading sessions or so of the carnage. So, looking at this entire volatility, should the NSE in its next review really review some of these stocks, and can they be pulled out of the nifty stocks, especially for Adani Enterprises and Adani Ports and SEZ? And has there been a similar situation before? How has the NSE really responded to a situation like this, and can this really happen?
So, basically they have a structure in place, the exchanges. It is not done on any distinct random basis. So it's
Okay.
based on the MCAP. It is actually based on the volumes and the float available in the market.
Mm-hmm.
So I don't think exchanges will go out of the way to uh, something to a stock, or do some changes that are not in line with the structure or the approved
Hmm.
the practice.
Hmm.
Unless there is, in some past we have seen that there is a case of uh, some kind of a fraud or a scam where it has been proven, someone has been jailed. That's a
Sure.
story is not the same here. So I think exchanges will go as per their this process in place.
But do you think the fear that investors are having all across social media, we have been hearing this buzz that perhaps the Adani Group or most of the stocks can actually go the yes bank way? Is that something that investors are having the correct fear in, or how should they be looking at this route?
So it's a very speculative question, and I really don't think it's anything like that you know is this thing proven here,
Yeah.
and and more importantly, a lot of businesses that they have, as I said, have got got this hard assets in place.
Sure.
So it's not that they don't have the assets, they don't have the cash flows, they don't have the businesses going.
Okay, so but at this current point, most of the investors who are actually looking at these mouth-watering valuations, you're saying all those companies with hard assets like a ports and cement, Ambuja Cements, would be the right picks for them to go in for right now, if at all they're looking
I
for an opportunity.
Correct, correct. I think
These
so.
two stocks, okay, and they should
Correct.
not get into Adani Enterprises, the flagship company as of now, because nothing is clear.
So that's a ocean for me.
Okay.
It's a this thing holding company with interest across the group. So So I don't understand that company well, so I cannot advise that company.
Okay, but overall in the markets, like you pointed out, a few sectors where you are actually looking at, or themes where you are looking at. Any particular stocks that you can mention for all our viewers where they can actually look at current opportunities being presented?
So what we have seen because of the past year of this whole 3 year of hard lending, soft lending, some of these stocks or the spaces that were into exports have uh, have gone out of shape. They're down by 40, 50%, 60%. With that fear now that not there, I think say some of these stocks will do well. Like I spoke of IT sector, same way I think exports of this thing textiles is good. And this thing garments, people like Himmat Singha, Arvind Limited, Gokuldas Exports, they are all down from price earning multiples of 30, 35 to now this 11, 12, 13, 14, which look attractive to us. One can for this in short term also play on this whole theme of this heat wave. So you can
Okay.
actually go and buy stocks like like this Voltas, Blue Star, Symphonies of the world,
Okay.
and you can get some upside there in the short term.
All right, understood that. Well, thank you so much, Mr. Dua, for being with us on the show and discussing with us all these various aspects of the market. We are still down in trade, about 926 points now gone for the Sensex, 59,749. So we are drifting lower towards the lowest point of the day again as we inch closer. About 11 minutes remaining for the markets to shut shop, and we are now below 17,550 as we speak. 278 points gone, 1.6% of a decline for both these benchmark indices, and sharp declines really coming about from various sectors, all the sectors now down in the red. So it could be the fourth consecutive session when we will see a negative close for the markets. We'll keep an eye out on this, so you stay tuned on to Business Today TV to catch all the updates from the world of business and stock markets. You can also continue to engage with us on our social media platforms, that's Facebook, Twitter, LinkedIn and Instagram, to catch all the buzzing action right there too. Many thanks for tuning in for this one. The pocket that's again back in the news today is the Adani group of stocks. So we'll definitely focus on that as well and try to help all our viewers understand what is